Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
There was a story I saw on Bloomberg News, I think it was actually yesterday. It noted that the price of new initial public offerings and the formation of blank check vehicles, which we were talking about, I feel like go back a couple years,
yes, they're
all
very
the time,
in vogue, yes,
have both picked up amid a lukewarm market for non-SPAC U.S. IPOs. So a cadence of 10 to 15 new SPACs per quarter would strike a delicate balance, offering an alternative to traditional first-time share sales without inviting comparisons to the mania of the go-go stretch from 2020 to 2021. Go back, right, off the pandemic, it felt like everybody and anybody, many celebrities, everybody was starting a SPAC.
A lot of SPACs, a lot of people learning what the phrase means. Our next guest has some thoughts on the IPO and SPAC markets. Back with us is Isabelle Freidheim, the founder and CEO of Athena. It's an all-women-led SPAC platform. She's here to talk to us to why she thinks the SEC is stifling the IPO. Come back. She's joining us today from Lima, Peru.
Can I say special purpose acquisition vehicle?
Thank you so much. You better than I.
Company, I should say.
Yeah. Isabelle, just give us the lay of the land here. I mean, interest rates are still high, relatively speaking, but our colleague Preston Brewer at Bloomberg Law writing about how he thinks the IPO market has kind of turned a corner here. We are seeing more of them, seeing larger ones. What's your read of sort of where we are in the bounce back of the IPO market?
Thanks, David. The IPO market is turning a corner indeed. We have seen in the last few months a number of high-profile IPOs that have done decently well in the market. But to your point, interest rates continue to be high, as does inflation. So it is, and hopefully it won't be the case that the Fed will change interest rates from in a pattern that will go up and down. So we expect for now interest rates to continue to be steady for the most part. The IPO market itself is a reflection of investor sentiment, and it has been the case in the last 3 years. And to your point, has been to the detriment of SPACs, unfortunately, that investors have taken a risk-off posture when it comes to making investments in companies that are cash-burning companies that are high growth, typically tech or climate sectors. So we're seeing less of those going public now or going public through SPACs. And we are seeing more companies that are cash flow positive with industry tailwinds. But we're not quite there yet because there continues to be a lot of volatility in the market. And I think that will continue to be the case until the elections up until 2025.
Isabelle, I feel like when we talk about SPACs, it's like it just goes through these cycles where everybody kind of, we start talking about them, there's interest, everybody plows into them, then everybody backs off because they don't perform. So I don't know, how do you make sense of, is there a healthy SPAC cycle?
Yeah, there is a healthy SPAC. SPACs continue to play a purpose in the market. They continue to be good for some companies. There have been abuses. And to your prior question on the SEC was very quick to jump on SPACs because of the amounts of capital that were flowing into SPAC products, which frankly has never been the SEC's mandates. So the SEC, broadly speaking, and that's not just true for SPACs, it's true for other areas of the market as well, it is in a way stifling companies' access to the public market by making it so difficult and so over-regulated to go public. And that's whether it's through a SPAC, through an IPO, through a direct listing. And that's not new. The administration currently, the SEC administration, has made it worse, certainly in the last couple of years. It's unclear why, frankly, and what they're addressing. But it has been 20 years now that the regulatory environment in the U.S. has made it difficult and costly for companies to access the public equity markets. And
yeah, I was going to say, David, it felt like for many years that the reason companies weren't going public is because they didn't need to. There was so much money in the private markets that they could stay private for an extended period of time. And in some ways that creates, I feel like, healthier companies, or some market observers would say that you stay private for longer, you do create a company that has a sustainable business model.
A fascinating point. Go ahead. Yeah, jump in.
When you have a strong private equity market, sure, but the venture capital industry exists because of exit opportunities that can be to private equity, but also primarily to the public market. So not only is it difficult for companies to access the public equity market, remember, the number of publicly traded companies has consistently gone down now almost 90% in the last 30 years. And there needs to be a recovery. And that's the role that SPACs played at some point. But of course, we've been operating in a challenging market, but there needs to continue to be access to capital beyond what the venture capital industry can offer to technology companies to fund innovation, because capital is the lifeblood of innovation. The United States has led for many years in that respect, and in the absence of exit opportunities, we're stifling access to capital, both in venture capital and in the public equity markets, and access for tech companies to the public equity markets. It's not just tech, it's life sciences, it's climate, companies that will solve tomorrow's challenges.
Isabelle, I want to ask you just about sort of what regulators have said, and Gary Gensler is chief among them, who's certainly singled out SPACs as a place where he'd like to see the SEC do more. And I think one area on which he's focused is disclosure, that investors don't know enough to say about who's sponsoring a particular one. Let me step back and ask you, sort of, what do you think the regulatory framework should look like for SPACs? And you've talked a bit about sort of the SEC's role and the scrutiny that's applied to special purpose acquisition companies. What kind of touch, how light a touch or how heavy a touch do you think that the SEC should have when it comes to these kind of offerings?
So remember that SPACs exist because they provided investors in 2019 and 2020 with access to high growth companies. Investments in those companies is challenging in the private market. It's risky. And SPACs, in a way, being publicly traded companies and taking companies public, makes for a much less risky investment when you invest in the same company, whether it is private in the venture market or as a publicly traded company. Now, there was a point in time when investors couldn't access yield in any other product that high growth equities. And that's why they piled into SPACs and into the promise of growth and yields. Now, the yields have shifted and they can be accessed now through other products, especially debt right now. But so there's been a pullback and a natural adjustment and I would say an overcorrection, but there has been a natural adjustment that the SEC has no business regulating, frankly. I mean, the disclosures is one thing to prevent fraud, but the disclosures are there. And sure, most SPACs these days proactively disclose more information than is required by regulators. And those are important to protect retail investors. So I'm very much in favor of disclosures.
Isabelle, just got about 45, 50 seconds left here. I mean, what is it that we get for companies or for investors, via a SPAC versus angel investing or VC investing? And again, we don't have a lot of time, unfortunately.
You get the transparency, you get the liquidity, you can sell your shares that you cannot sell in an early stage company. You get the access to full disclosures, to your point. So that's taken care of.
All right, going to leave it on that note. Listen, great to get some time, something to think about on this Friday, right? We actually talked to, I think it was Ardent Health yesterday, an IPO. So we are seeing some things happening in the IPO market.
Yeah, I'm just going back to that article by our colleague Preston Brewer at Bloomberg Law. He's saying, although they're not among the largest IPOs, biotech companies are seeing a resurgence. Total capital raised in the first half of this year, $21.2 billion. So things directionally seem to be going in the right place. But again, this conversation about regulation, a roiling one, has been for a few years. And as we talk about the election, what might or might not change, certainly something I think that's on a lot of voters' minds.
Absolutely. Isabelle Freidheim, she is the founder and CEO of Athena, the all-women-led SPAC platform, joining us from Lima, Peru. All right, folks, you are listening and watching Bloomberg Businessweek. This is Bloomberg.